Hey everyone, today is February 11th, 2022, and we have a very special episode for you guys today. And I know that this week there's a lot of stuff going on with geopolitical stuff. Apparently, we're headed to war with the Ukraine, emergency rate hike, 7.5% inflation. We're going to go over some of the highlight headlines of this week, but the more important thing that we're going to get to in a little bit is we're going to talk all about carbon credits, this new emerging sector in the age of ESG mandates that I think is going very underlooked right now, and I think it's going to play a very important part in investment portfolios in the future. And we have a community member, Bennett, here who is going to tell us everything about it. He's put together a really awesome presentation, and you're not going to want to miss it. So, to start this week off, let's just go over some of the bigger things that did happen. We had US inflation rate climbing to 7.5%. And so, over the past few weeks, we've been talking about, has inflation peaked? What's the Fed going to do? One rate hike, two, three, four, five, six, who knows at this point. But what we do know now is that inflation is sticky. We knew that it wasn't transitory quite a while ago, but we're learning now that it is pretty sticky. And it's all in the backdrop of a lot of stuff going on with supply chain right now. If you've been following the news, you've undoubtedly seen the trucker convoys in Canada. I think there's a major bridge in eastern Canada that accounts for 25% of Canadian imports that is actually being blocked off by the convoy. Whatever your political opinion is on these things, whether you support them or whether you're not, whether you don't, doesn't matter. What does matter if you're into markets is that, the supply chain stuff I don't think is going to resolve itself as quickly as people thought it would. So what's the data? Inflation, yet again, printing a 40-year high. Some of the items that have gone up the most have been oil. Oil is one of the biggest contributors year over year. It's up about 40%. And, people aren't feeling too good about these things. But what does that mean for rate hikes? Well, coming this Monday, the Fed is actually getting together to have a emergency meeting to talk about rate hikes. And so usually they like to raise rates by about 25 basis points, which is like 1/4% per meeting or per term. And the general consensus has been to do this basically, every couple months until the end of the year, and maybe we get to about 1% federal funds rate. But now it's looking more and more that the FOMC, or the meeting in March, which is coming up, which is supposed to be the first rate hike, instead of that being 25 basis points, it's looking like it's going to be closer and closer to 50 basis points. How that affects the market, I don't know, but the market in terms of betting has begun to already price this in. So yeah, we'll see how that develops. Second off, we have the US believing that Putin has decided to invade the Ukraine and communicated those plans to the Russian military. Three officials tell the Geoff Bennett here is a reporter. But yeah, there's a lot of news swirling around. Is Russia going to finally step into the Ukraine? My opinion on this is I know that markets generally react pretty binarily to reports of war. It's almost everything goes down, but oil and gold go up. And sometimes weapon companies go up as well. So Boeing, Lockheed Martin, some of these defense stocks get a little pump out of it. But again, none of this stuff is confirmed. My political opinion on this essentially is that I think the US media and the White House have been kind of like poking the Russian bear for the last few weeks, almost as if they want war. They've used these, really flowery language like invasion is imminent. Officials expect a horrific, bloody campaign that begins with 2 days of bombardment and electronic warfare, followed by an invasion with the possible goal of regime change. Again, apparently they have info that they're going to declassify that confirms this, but at this point it's just rumors, and I don't know. I feel like it's kind of irresponsible and not really conductive to, I guess, sound the alarms on this, but who knows? Curious what your thoughts are on this, everyone. I know that no one really likes war in general, but yeah, a little bit crazy times. Speaking of Russia, we talked last week about how Russia has done this really big 180 on Bitcoin. And so that continued this week with them coming out, putting out a roadmap on how they're going to legislate cryptocurrency in the future. So the Russian government published a document this Tuesday outlining principles for regulating Bitcoin and cryptocurrency in the country. For me, one of the highlights was that in this document published yesterday, it reflects an intention to realize that Bitcoin cannot be stopped and instead seeks to put laws and restrictions in place to empower watchdogs and ensure the government gets the taxes owed by citizens and businesses. State efforts will also include licensing exchanges and banks interested in providing Bitcoin services to ensure that they have liquidity cushions, the document said. Only financial institutions that get a license will have the right to open cryptocurrency related accounts for individuals. So they went from let's ban it, central bank hates it, to Putin thinks it's okay, maybe we get into mining, to let's legalize it for the whole country and actually begin to treat them more like currencies, which I think is interesting because a lot of other nations that are looking to legislate on Bitcoin are saying, oh, let's treat them like securities. And when you say you're going to treat something like a currency, that essentially implies you're not going to tax it the same way as somebody just speculating on a stock. So, we'll see what happens there. But like I said, when it's about game theory, it's there's two steps to this. I think that it's in Russia's best interest to embrace Bitcoin just for their own sovereignty. Just, if they're pissed off for the last 40, 50 years that the price of oil has been priced in US dollars, then, trying to nudge it towards getting priced in Bitcoin will help them avoid sanctions and have a little bit more freedom to do what they want. But we know that they can't all go gung-ho on the Bitcoin standard right away, as essentially that will basically force NATO and other, opposition countries to start to crack down on Bitcoin as a sanction escaping tool. So I think a lot of the countries that want to embrace Bitcoin right now, they might look at what El Salvador is doing and say, that comes later down the road. We have to kind of tread lightly on this because if, a big power jumps into it right away, that might create a narrative against it and, stymie the usage of it. So my take on that. Speaking of Bitcoin, another big narrative is obviously how it's so bad for the environment. But I've found these little stories popping up. And one of the ones that I came across this week that was kind of interesting is that there's a Norwegian mine that is essentially using the heat that is created from their Bitcoin miners to dry wood in their facility, which is then sold or used by local lumberjacks. So, Bitcoin mining uses a lot of electricity, produces heat, and that heat can be used for all sorts of things. There's a company in Vancouver that I believe is using that heat to heat apartments, and now it's being shown that it can also dry wood in a wet country. Lastly, another big step for corporations getting into this, KPMG, which is one of Canada's biggest tax accounting auditing firms, they have made a strategic investment into Bitcoin and Ethereum. And they've essentially said, we believe in the long-term value of crypto assets. We've been advising a lot of our clients in terms of how they should be thinking about it. And this is just us putting our skin in the game. So skin in the game, big deal. A thing to kind of segue into the carbon credits thing is that KPMG, in part of their purchase of Bitcoin and Ethereum for their balance sheet, also purchased carbon credits to offset the potential emissions that may be linked to Bitcoin and Ethereum. And we're going to segue here in a second over to Bennett, who is going to give us a fantastic presentation on carbon credits. I've gone over the presentation a little bit, but he's going to take the lead from me here and explain what exactly this is all about. The floor is yours, Bennett.
Right on. Well, first and foremost, thank you for having me on, Julian. My name is Bennett Ray Reese. This is a little thing I put together on carbon credits, and just a little background about myself first. I'm generally not a fan of how you define yourself, because how do you articulate yourself in like 2 or 3 sentences? But I'm a guy in my mid-30s who lives in the greater New York City region. I was born and raised in the New York City area. I'm half American, half Peruvian. Academically, I have a background in economics and social work, and I guess today I take most pride in the fact that a happily married husband, person in long-term recovery, trader, gamer, and I love to travel. And through all these random things, I was turned on to the world of carbon credits about a year ago, and I've just tried to learn as much as I can. I've gone down the rabbit hole, so let's get started. First and foremost, like, what are carbon credits? The simple way to describe the big picture is a carbon credit, in simple terms, represents 1 ton of carbon dioxide that's removed from the atmosphere. And by removing that 1 ton of carbon dioxide from the atmosphere, our carbon credit is generated. And the key point I want to just drill into this presentation is this carbon credit then has monetary value, and it's a way to capture carbon, which is a problem because we're facing environmental disaster around the whole world. And these credits are earned through offsetting emissions, either directly through like changing to renewable energy, or by protecting regions in the environment that actually offset carbon through like the rainforest, which is the traditional way we think about it, like the Amazon rainforest, the rainforest in the Congo or Southeast Asia, or through coral reefs and environmental areas in the marine life. So why would a company want to do this, and like what's the process, I think, is the next question to ask. And an example would be, I'm not trying to pinpoint or blacklist any company name, so I made a totally hypothetical company that I named Pierre's Petrol from France. And let's assume Pierre's Petrol from France produces 1 billion tons of CO2. And that was an average I took from just Googling how much carbon is produced by, CO2 is produced by various petrol companies and oil companies around the world. So if they produce 1 billion tons of CO2, and the European Union has stated, which is true, you can look it up, that they want to reduce CO2 emissions by 55% by 2030. It's not exactly easy for this company to snap their fingers and suddenly like upgrade all their operations, go green, and offset their production. So one way a global company can start to reduce their CO2 footprint is by purchasing carbon credits. And like when I first heard the concept behind this, I'm like, that kind of sounds like a tax. You're taxing them to essentially lower their CO2 footprint. And that's, you can't think of it that way, but when you dive deeper, I don't view it totally as a tax because it's really an output of their commodity cost. And by reducing their carbon footprint, they can actually end up, in today's market dynamics, making more money. And they do that by increasing the likelihood of people investing in them. And with, as Julian said just earlier, there's a huge wave of movement towards ESG and green mandates. There's a green bond market that's developing, and that's beyond the scope of this short presentation, but big picture, companies are trying to go green, and by going green, they will attract more investment. So it's not quite a tax, it's just the market working itself in a way where people now are attributing value to being greener, and therefore they want these companies to be greener, and carbon credits are presenting themselves as a way to get companies to be greener as they transition their actual technologies and operations. Now, how and where does a company or individual even purchase these things called carbon credits? There are a variety of quote-unquote issuers. The two big ones right now are called Vera, or the Verified Carbon Standard, VCS, and they're the #1 issuer of carbon credits, and Gold Standard. Vera is #1 by a large margin, and the way they work is, let's say you have a 10,000 hectare concession of virgin rainforest in the Brazilian Amazon. Now, the owner of that virgin concession of 10,000 hectares of Amazon property can claim rights to their 10,000 hectares, whatever amount of carbon can be, whatever amount of CO2 can be taken out of the atmosphere from that 10,000 hectare concession. They can claim rights, but the forest is located in Brazil. So the Vera standard also allows Brazil, the country, the host country, to claim credit to that carbon credit. Then there's the Gold Standard, which it's either or. Either the company that owns the concession or the country can claim the carbon credit. And that kind of disincentivizes the private companies and host countries from working together. So in my personal opinion, it makes sense that Vera should be the way to move forward, but time will tell which option actually ends up emerging as the standard. But right now, Vera is the leader by far. Now, there are different types of carbon credits. As I briefly alluded to before, the amount of CO2 that is captured from virgin rainforests is the traditional way we think about save the rainforest. It helps reduce pollution and helps reduce CO2. But actually, marine carbon credits, like from coastal wetlands, mangrove forests, salt marshes, or coral reefs, actually extract more CO2 from the atmosphere than virgin rainforest does in Brazil, the Congo, or Indonesia, etc. So blue carbon credits are carbon credits that come from the marine variety, and green carbon credits are the ones that come from rainforest, Amazon, etc. Then there's a third category called white carbon credits, which I can't even pretend to be an expert on. And just in general, I'm no expert on carbon credits. I'm trying to learn as much as I can, and this is my synopsis of it. But white carbon credits are related to the aviation industry, because the aviation industry produces a ton of CO2 and other derivatives of pollution that require a different type of offset. Here's just a little graph. This is just a little graph of how the whole situation works. I mean, on the left side, you see how carbon is captured from the green credits. On the right side, from the blue credits. And my big thinking in this whole thing is we are now, because of the way the environment has been destroyed, attributing more and more value to protecting and maintaining a safe environment and a healthy environment. So this probably wouldn't have been possible 20 years ago, but you could have 10,000 hectares of lush Brazilian Amazon. You could cut it down and start planting soy, grazing cows, grazing chickens, and that generates economic activity. Or you can have a marine ecosystem somewhere like in the Gulf of Mexico, and you could start farming shrimp. And 10, 20 years ago, it was probably more economically viable to do that. But now, because of the value society is placing on protecting the environment and global warming and all the natural disasters happening because of climate change, we're now attributing more value to protecting these resources. And as we see, by protecting them, we help save the environment. And keeping that in mind, that we're now, as a society, attributing more value to protecting these ecosystems, what is the potential size of this market? Today, the carbon market is still in its infancy. It represents a market size, not including government-mandated offsets, of about 1.5 billion. To put that into perspective, I think as of yesterday, it dropped a little bit today, but the crypto market is about 2 trillion, excuse me. The gold and copper market is 200 billion. Oil is about 1.9 trillion. And according to Marin Katusa, who I view as, and excuse me if I'm wrong by some of these numbers, these are just the data I acquired. Marin Katusa is like my guru in the carbon market sector. He believes that by 2030, the carbon market will be larger than gold and copper, and by 2040, it could be 2 trillion larger than the oil market. So that just puts things into perspective on how big it could possibly get. Now, let's talk about the types of greenhouse gas emissions that are produced. Like, let's just take Scope 1 to start. Scope 1 are greenhouse gas emissions that come from company operations. Let's think about, you have a mining company in Chile, and that mining company emits greenhouse gases from its production facilities, such as like having to smelt the ore, the vehicles that have to transport the ore and equipment, and from their general operations. That's Scope 1 directly produced by that company. Then there's Scope 2. That company, in order to operate their facilities, has to tap into the country or the local electricity grid. And that local electricity company might be generating that electricity from burning fossil fuels, so that's Scope 2. And then there's Scope 3, which is a little bit more of a gray area that's still being defined. All the employees that go to work for that said mining company in Chile are driving to work. Maybe they have to fly to a far-off region of Chile to go to that mining facility. And that same mining facility produces waste. All these things I just described also produce CO2. So who's responsible for that? Those are Scope 3 emissions that are still, there's no clear line on who to attribute those emissions to and who should have to pay for that pollution. But no matter what, it does get emitted into the atmosphere, and us as a society, human beings, ultimately do have to pay for that. Now, getting back into the different types of greenhouse gas emissions, I'm going to focus just on 5,200 companies with a market cap of 1 billion or more that are publicly traded in North America or Europe stock exchanges. And this is not even to count the companies that are traded in Asia. I believe the market cap of like Tokyo, Hong Kong, Shanghai are even greater than the market cap of European stock exchanges. So this just puts things into how big this market can be. Right now I'm speaking just about Europe and North America. Of the 5,200 companies with a market cap of 1 billion or more, 2,400 of those companies actually already report their scope 1 greenhouse gas emissions. So we do have some data to know how much greenhouse gases are being produced by these companies, and theoretically gives us an idea of what amount of carbon credits these companies may need to one day or soon acquire. Of those 2,400, 457 of those publicly traded companies have already announced some type of plan to reduce their greenhouse gas emissions, and they did this last year in 2 years ago now in 2020. Of those, 125 of the larger corporations have already pledged to go voluntarily carbon neutral. So you already have 125 of those companies valued $1 billion or more pledging to go carbon neutral. And they're not going to do this totally by changing their operations to solar panels and hydropower. They're going to have to buy some carbon credits. Now, you might ask, like, I used to think, like, oh, this is all publicity stuff. Like, are they doing this just for publicity? And you could say, well, after the Kyoto protocols, 100% of members failed to meet their targets. So why is this time different? And the reason is simple. As I mentioned before, money and the market dynamics have changed. When the Kyoto protocols were put into place, the incentives monetarily were not there. Today, it's different. ETFs, funds, ESG mandates are all creating the incentive and economic environment that will make it more viable for this to happen. And even bigger than the $2 trillion crypto market, I think the US stock exchanges in total about 50 trillion in market cap. The bond market's even bigger than the stock market. And green bonds are now the newest and largest source of growth in the bond market. Now, considering the bond market dwarfs even the stock market, and that this is typically where smart money and big pools of capital like to go because bonds are traditionally considered safer investments, you're going to have a lot of money going into ESG and green investments, and one of those investment pools is going to be carbon credits, in my opinion, in my perspective. And I've always learned, wise people have told me my whole life, follow the trail of money and you'll get closer to the truth. Now, I realize now after looking at this presentation, I did name two companies, but I have no bias or malice towards these two companies. But let's just assume we have Apple and Exxon, and they want to tap the bond market to fund their businesses. They want to access the very lowest cost of capital when they're funding their businesses. And if more ESG mandates come into place, they might not get the best rates unless they're meeting those ESG mandates and goals. So it's going to be in their interest to somehow offset their CO2 and greenhouse gas emissions, and one way they can do that to meet ESG mandates will be to purchase carbon credits. And therein lies the cycle that's going to keep going, is in order for them to continue being profitable, accessing cheap money, they're going to need to lower their CO2 footprint, and the way to do that, one way will be through carbon credits. Now, who is Catherine Carvin? This is a company that I'm just going to preface by saying I am invested in, so I'm perhaps a little biased, so just take that with a grain of salt. Carbon Streaming Corp is a great example of a company. I kind of think of them as like a gold or precious metals royalty company. They are a company focused on acquiring, managing, and growing high-quality portfolio of investments and projects and companies that are either directly or actively somehow involved in the voluntary or compliance carbon credit markets. Now, carbon credits are a contractual agreement, once again, whereby carbon streaming company will make upfront payments to companies for a portion of their future carbon credits generated by a project. An additional per carbon delivery payment is then paid to the project developer or owner when the carbon credits are delivered or sold by Carbon Streaming Corp. And lastly, the stream agreement allows carbon streaming exposure to carbon credits and potential price appreciation without taking on operating responsibility. Now, let's dive into the actual projects they're investing in to see how carbon's being captured. There are three that I highlighted. One is, and excuse my pronunciation, anyone who knows me knows I'm really bad at pronouncing things, but the Rimba Raya Biodiversity Project in Borneo, Indonesia represents 64,000 hectares, and it's a valuable ecosystem that would otherwise be converted into palm oil plantations, and they're going to protect this ecosystem and study to see how much carbon is actually captured from the existence and protecting of this ecosystem over a 30-year life of this carbon offset project. So there's the first example. This could be used economically to produce palm oil, but because of the changing dynamics and market forces in the world, it is now just as viable, or will be slightly in the future, or already is, to conserve it and actually procure carbon credits from it. Second, we have the magnificent Magdalena Bay in Baja California Sur de Mexico. This is a preservation and sustainable management of approximately 22,000 hectares of mangroves and 137,000 hectares of surrounding marine environments. These are the blue carbon credits I mentioned before. And they're going to protect this instead of using it for fishing or for aquatic industrial shrimp farming. They're going to protect it. And it's more valuable now, especially because they're blue carbon credits, to protect it than it would be to use it for other reasons. And third is the Bonneville Conservation Initiative in the Congo. This is very close to heart too for me, because in a past life I used to live in Shanghai and try to work in the import-export of tropical hardwoods from Africa and Latin America to the Chinese market. And it's very hard to source ethical timber. And the Congo is one of the biggest tropical hardwood exporters. So instead of using this land to export tropical hardwood, they're going to conserve 5,258,700 hectares of conservation area in two separate projects and capture carbon instead of using it for other reasons. And therein lies, I love the Amazon. I love the beach. Two things close to my heart. My grandpa was from the Peruvian Amazon. I love going to the beach and scuba diving and surfing and swimming. I don't want these places to get destroyed. I also like money, and this just represents a perfect way to both realistically in today's day and age help protect the environment and also generate income and investments for people and the countries where these resources are located and the owners of these resources. And now, lastly, how do you invest in carbon credits? And I'm going to preface this by saying I personally am an investor in all of these that my jurisdiction in New York State allows me to invest in. So that's all of them except for two of the cryptos. So I'm a little biased here, but these are some ways to invest in them. You have stocks and equities and ETFs. Acre Carbon Capture is a Norwegian company that's traded in the Norwegian Oslo Stock Exchange. You have iPath's B Carbon ETN, Crane Shares, California and European carbon credits, the Global Carbon Credit Strategy ETF. Those are all traded in the United States. And then you have Carbon Streaming Corp, which is traded in Canada, and the OTC exchange in the US. And you have three types of cryptos. The only one I'm really familiar with and can speak for is Moss Carbon Credit, because that's traded in the US on the Gemini crypto exchange. And that's a company that literally has conserved carbon areas of the Brazilian Amazon and created carbon credits from the protection of that Amazon and put those carbon credits onto the blockchain that you can now buy. And I'm just going to end the presentation because I'm also a crypto nut. I've discovered Bitcoin in 2013 and invested in 2017. Been very passionate about it ever since, and there's always naysayers about how the blockchain has no use, how Bitcoin doesn't make sense, and this is a perfect example of using the blockchain in a realistic fashion. And there you go. That's my little synopsis on carbon credits. I hope you guys enjoyed it. And once again, Julian, thanks for having me on.
All right. Thanks so much, Bennett. Really appreciate it. That was an awesome presentation. I have a couple of questions, but I'm just going to open the chat here really quick because some people might have some questions themselves. So if you're watching this live, you have any questions, feel free to submit them. If you're not watching live, you have any questions about the presentation, you can either leave them in the comment section of this video, or you can hop on the Discord, the link's in the description, and you can ask myself or Bennett, but probably Bennett because I don't know much. One of the questions I had is it reminds me a lot of these like mining industries. So we have like this conversation that always goes around, oh, should I invest in gold miners or gold? Should I invest in Bitcoin miners or Bitcoin? Where do you stand on this? Because obviously carbon credits are not something that like an individual might purchase, but maybe like a carbon bond might. Would you say that that's a better allocation than just buying equity in some of these companies?
Mm. That's kind of why I've invested in the basket. I mean, you have these ETNs and ETFs, iPaths, Crane shares that invest in a basket of carbon offsets from like the European exchange, the California exchange, and I feel like that's one way to get exposure. Then I have Carbon Streaming Corp, which I view like, as I said, a royalty company that invests in actual projects, obtaining carbon credits from the protection of these resources. And then I also have invested in Moss Carbon Credit on the crypto side, which is actually a company that I'm technically buying portions of their carbon credits on the blockchain. So I guess my answer is, personally, I'm investing across the board and nibbling in everything. Just like I'm also invested in gold miners, gold royalty companies, and ETFs that own a basket.
Awesome. And yeah, like another parallel I potentially see is the marijuana industry in some ways,
Mm.
because I think when these new sectors kind of emerge, the legislation is murky, it's not well defined. There's early leaders, but they are replaced by the second, the third, or the fourth inning. Do you think that a lot of the companies, let's just say that are like Exxon and these really big emitters, that instead of buying carbon credits, they might just invest into building companies and plants that capture carbon themselves and do it all under their own name? Or do you think most corporations that emit carbon are going to go out and still purchase carbon credits rather than build the infrastructure for the long term?
My personal view is they're not going to be able to do it quick enough to lower their CO2 footprint. So they're going to have to do both. They'll probably invest in carbon credits as a transitionary period until they can make their operations more green and maybe acquire carbon credits themselves. But it's going to be at least a 5 to 10 year window where they're going to have to purchase carbon credits in order to meet green levels of like acquiring certain levels of reducing their CO2 footprint.
And just a little question from chat here from Makiko. I don't know if you know about the climate DAO you mentioned, if you know a lot of it, but how does that really work when you're dealing with a DAO? How do climate or carbon credits work in a DAO format?
That's one that I'm not too familiar with because I live in New York State, which is a very restricted state in terms of what I can and cannot purchase in the crypto world. And Klima DAO is one that I'm not allowed to purchase, so I never really dive too deeply into it.
Cool. Yeah, let me think. I have questions in my head, but I'm trying to figure out how to like formulate them. A lot of these stocks, like the carbon streaming one, these are kind of like OTC. Is there anything really on the Nasdaq right now, like big corporations that are
No.
focused on this? No.
Carbon Streaming Corp hopefully will be listing on a U.S. stock exchange, on a U.S. exchange, probably the New York Stock Exchange. This summer is the goal, but right now they're just publicly traded in Canada and then the OTC.
When it comes to some of these like ETFs, like KRBN, I think there was one that was mentioned before, CARB. What's actually in those holdings like that represent a carbon
So I
strategy?
can speak for the Crane shares are literally carbon futures that trade in Europe and California. So they buy a basket of those. Crane shares represents carbon offsets from across the globe, but primarily also Europe and California. There are small exchanges. I know Canada has one, New England has one, and there are offshoots starting up in Asia. And then GRN, I'm not too familiar with exactly what it is, but I believe they're also futures traded in Europe and the United States. And then Acre Carbon Capture is a company in Norway that's actually working on the technology behind uh, companies that are going to be creating technologies that capture CO2 from the atmosphere.
And I guess just personally, if I wanted to, I guess, follow some type of resource to learn more about how this market is developing, where would I go? I know you mentioned Katusa Research is doing a lot on it. Where
Yeah,
else do you go to
Catoosa
kind of?
Research, and then there are various YouTube channels. Mostly, I find about YouTube channels based in Europe that are up to speed with the latest news related to carbon credits. I believe one is Carbon Credit News on YouTube, and then there's Catoosa Research, which is my primary go-to source.
Cool. I think that's everything. Do you have anything else you wanted to add? Maybe that wasn't on the slide, or just your thoughts?
Not that I can think of right now. All I know is that the same mind-blowing potential that I saw when I discovered Bitcoin and started really diving into it in 2017, where this is a decentralized instant payment network that the whole world will be able to use. And I saw the potential in it just there. Like I have the same feeling of excitement that I got back then now with carbon credits because I want to help protect the environment, and I'm not some hippie in some peace circle, but I want to make the environment a safe place for future generations, and I think this is a realistic way to do it and keep market forces alive.
Do you think the international the UN is ever going to hold America accountable for all the carbon they've emitted through the wars?
No comment to that one, my friend.
I'm sure they have to buy a lot if that
Yeah.
becomes the case.
How to quantify that would be very difficult.
All right. Thanks so much, everyone. That's about it for the day. Again, if you have any questions about this stuff, feel free to leave a comment, and Bennett or I will get back to you in either the comment section of this video or the Discord. Yeah, this was super fun to try out for the first time. Hope to have Bennett on again in the future, and we'll make sure to cover some more carbon, I guess, capture or credit-based news in the regular show as well, because I am definitely intrigued by this, and I'm going to be pulling up the charts and all of these things pretty soon to see what I can pick up. All right. Take care, everyone, and yeah, see you next week. Peace.